But let's do one thing. Let's focus on Hatsun Agro products. Pull up the chart. I think what the street really likes, it's a good performance, no two ways about that. But what the street really likes is the margin improvement that we've seen this time. The margins have come in at 11.2% versus 8.7% same time last year. So reduction in milk prices aided the EBITDA this time, and the profits doubled because of the margin expansion. To discuss more on this, we have RG Chandramogan, the chairman of Hatsun Agro Products. Mr. Chandramogan, always great speaking to you. Thank you for being with us on the channel once again. It's the operational beat which the street really likes, but I want to understand from these 11.2% margins, how much can you build on to it? Do you see further reduction in prices? Can that aid your margins further? And if yes, by the end of FY25, FY26, what kind of margin range are we looking at for the business?
See, last year before we had milk shortage, and the milk shortage has already gone as a past. And things are improving, and this year we had an enormous flush. Once when we were getting enormous flush, we were able to bring down the cost of procurement expenses because we were able to handle volume. And the production efficiency also came along with it. And the benefit is coming to 11.2%. Normally, January, February, March is our lean month, where procurement will be going down and the sales will not pick up because summer has not come. This time also the same thing, but summer is expected to be very hot. But we are prepared for the summer. We have already done a good procurement of more than 20%, and we are sitting with enough stock to manage the supplies in the summer without any difficulty. And 25-26, we can think of anywhere between 15 to 20% growth of sales and a little better EBITDA margin possible.
Okay, so 15 to 20% growth is a top line you're looking at in FY26, right? That is the kind of growth that you're looking at. But on margins, is it fair to assume that you can build on to about 13-14% margins as well in FY25-26?
1.5% we can increase from the present 11.2.
Okay, so that will be around 12.5 to around 13%.
Around that, we can definitely look at.
Oh, that's an impressive guidance then. So mid-teen growth is what you're looking at on the revenue front, and margins improving by around 150 basis points. Well done on that front. And congratulations, Mr. Chandramogan, on a very, very good set of numbers. But I wanted to question you on your debt. That appears it has gone up marginally, holding at around 2,000 crores. I recall when we charted the last time around, you said that you have some capex that's underway, but in the next 2 years, that debt will come down to around 500 crores. Is that on track? And could you tell us, should we be saying that in the second half of FY26, the debt comes down to 500 crores?
No, actually, it is possible because probably we have got a buffer stock to manage the summer. This is the reason why that it is just not the machinery alone. So we will be able to moderate it. The inflow is getting better. Stocks will also get reduced. So July of 2026, the debt can be brought to the level what we want. In case if there is going to be a potential expansion, it may differ. Depending on the market sentiment, we may have to do it. If there are no major investments, it is possible to bring it down.
Mr. Chandramogan, value-added products, right, like ice cream, curd, etc., in aggregate, it's about 30% of your business. Could you put out some sort of details for each of these segments specifically? What are you expecting? I mean, will these grow much faster?
The value-added product is a branded product, not just milk, curd or ice cream. All our products are branded, and our sales is 96 to 97% is branded products. And we have no differentiation. All products are comparatively having a good growth and a better margin. The reason being we are market leaders in every segment where we are present.
You wouldn't differentiate between, okay, it's all branded, and I take that point. I was just sort of making the differentiation between milk, curd and ice creams. And typically we'd kind of sort of call the other two, the latter two, as value added.
Definitely the segments of curd and ice cream is increasing as a percentage of revenue among the basket compared to milk. Definitely it is also contributing. But without milk, nothing can happen.
Obviously,
yeah. Can you tell me a little bit about the gross margins as well? Your gross margins have now improved to almost 31%, thereabouts. Is there scope to improve it further?
1.5%. Probably that will also reflect in PBDIT and then further down.
Okay, so 1.5% improvement in gross margins is what we can expect. And what's your targeted spend on advertising, if you can tell me? Because, things are picking up, competition has also gone up quite a bit. So in terms of, as a percentage of your sales, how much are you comfortable spending over the next 1 to 2 years?
Approximately 2% we will be spending on the revenue.
Okay. All right, Mr. Chandramogan, also, you could tell us about the targeted contribution from the north-south geographies. In the past, you've mentioned that you would like, Tamil Nadu to decline a little bit. So could you tell us how is the geographic sales breakup panning out and where do you see it headed?
Tamil Nadu today accounts for 52%. By end of the year, that is beginning of the next year, I expect it to be 48% because the growth, most of the growth is happening in the new markets.
Okay, and non-south, how much does it contribute right now?
Sorry?
Non-south.
No, there is no non-south. Non-south is only Maharashtra and also daily commodities. Mostly we are into south.
So it contributes non-south, if I have to call it that, and as you're saying, it's mostly Maharashtra. Currently, how much does it contribute? 15, 18%?
Probably if you leave non-south, it may be about 9%. Because mostly it is ice cream and not dairy products, except Maharashtra.
Okay, 9% of the total revenue mix, and you would like that number to move up as well, I think, to around 20% in the next few years, right?
That's right. We have only 2 factories in Maharashtra. Rest of the factories are all here in south. 18 factories are here in south. Only 2 factories we have in Maharashtra.
Okay, all right, Mr. Chandramogan, we'll leave it at that. Thanks a lot for joining in and appreciate your time here.